Good day, everybody, and welcome to our lesson Fundamentals of Accounting, Business and Management 1. Our reference for this course is the textbook authored by Rafael M. Lopez Jr. of the same title. Now, this is intended for students of the CIT-U or the Cebu Institute of Technology University. But if you are an accounting student or any party interested into accounting, you may also refer to this video lesson. My name is Attorney Lyndon A. Maceren, professor of the Cebu Institute of Technology University. I have a doctorate in jurisprudence, a master's degree in business administration, also a licensed certified public accountant, and licensed real estate broker. I've done all the academic units of the degree leading to doctorate in business administration. I only lack dissertation to complete it. So we will start now with our chapter 1. So this is the introduction to accounting. So if you are into accounting, you may wonder what knowledge is needed to study the subject. First, you have the ability to identify and acquaint or be familiar, in other words, with the proper use on various business documents supporting the transactions before these transactions can be recorded in the book of accounts. So what are these business documents that we are talking about? These are the receipts, the vouchers, the sales invoices, delivery receipts, and any other accounting documents. Also, you may be required to have analytical ability, which is recognized as what counts the most. This is to analyze transactions and situational problem in the business. So to determine if the correct accounts and the amounts that have to be debited or credited. Because our accounting or bookkeeping requires the two-entry method, which is the debit and the credit. It's called the two-entry balance method. Also required to study is the stock knowledge in arithmetic and not mathematics. So how do you distinguish the two? It's simple. Arithmetic is just addition, deduction, or minus, multiplication, and division. While mathematics includes calculus, algebra, trigonometry, and other kinds of mathematics. No? Also, the psychological factor behind, because you have to have good patience in order to be able to analyze well in the recording process. So you may wonder, is accounting needed in a business? Of course it is. No? Why? Primary motive of a person engaged in business is profit. So his main objective is to obtain profit and not to account or to make the bookkeeping the bookkeeping or the entries of the journal entries in the accounting of his business. So the businessman is primarily set in mind. His mindset is to make profit and not to record the transactions of his business. Also, its motive is to create job opportunities in order for others to be employed. However, this might only be incidental, depending on the nature of the business and the amount of the capital which the businessman has invested. Because some other businesses may not require so much labor or not labor intensive. Like if you will be engaged in a stock, or investing your money in bonds, you do not require so much labor. Now, accountants come into the picture or help the proprietor or the businessman in determining how much profit the business makes. And when the business grows bigger, of course, the businessman can no longer cope up with the recording process because he is not an accountant or he's not a bookkeeper. But if he is, then well and good. So if he is not a bookkeeper, or not an accountant, this point in time when the business grows, the bookkeeper or accountants may be needed in the world of business. They'll come into the picture in the business. So there, the term bookkeeper and accountants. So we will now distinguish who are bookkeepers from accountants. So what are the work of a bookkeeper? So bookkeeper are accounting technicians. They may be graduates or undergraduates of in a business course whose basic knowledge, experiences, and technical skills and accounting afforded them with the opportunities to handle accounting works, but not public accounting, because this public accounting is the privilege reserved to a CPA or a certified public accountant. So bookkeepers perform the traditional accounting works under the supervision of the CPA. So it includes working the financial reports or preparing the financial reports. So what are the financial reports? It could be the balance sheet, or known to be known as the financial position of the business, and the income statement or the comprehensive report on income. And then we have also the changes of the financial position or the cash flow. These are reports which are submitted to the CPA. And the CPA then reviews these financial reports submitted by the bookkeeper before it is being submitted to the external auditor to be reviewed. Now, the external auditor is also a CPA, or it may be a CPA firm. So what is a CPA firm? It's a group or a partnership of certified public accountants. So it's a partnership, meaning a group of professionals or CPAs have agreed to work together. So they assume the role as an independent entity vested with freedom to exercise their own judgment, requiring independence and impartiality of the reports being examined. So impartiality meaning without bias, independent meaning they are not free from any influence or Yes, not being free from any influence. So there's no undue influence. So there are works, these are the works done by the bookkeeper, the CPA, or the internal CPA, or it's called the internal accountant. And the one who audits the business is called the external auditor. Okay, this leads us to the question, what are professional accountants? Professional accountants are holders of baccalaureate degree in Bachelor of Science in Accountancy. And then after graduation, they passed the licensure examination for the certified public accountant and carry the title as CPA. They work, they can work in any of the national government agencies like the COA or the Commission on Audit, the BTR or the Bureau of Transportation, the BIR or the Bureau of Internal Revenue, the SEC or the Securities Exchange Commission, the Department of Finance, DPWH or Department of Public Works and Highways, including government-owned and controlled corporations like the SSS, GSIS, and other LGUs or LGUs like City Mayor's Office, the Provincial Office, Cebu Province, for instance, and any other LGU. Now, these persons working with the national government or the local government, they're called the CPAs in government service. Also, there are CPAs working in private companies, like the Abutis Group companies, San Miguel Corporation, this will build the Ayala Corporation or the Ayala Group of companies. And these are called the CPAs in commerce and industry. There are also CPAs who are practicing as a public practitioner. It can either be as an individual or as in partnership with other CPAs, which I have said earlier. And they can serve business clients as external auditors. So this group of CPAs can express independent opinions, set free from bias, regarding the financial statements they examined. So they are called the CPAs in public practice. They are the external auditors of a business. Okay, some accountants also joined in the academy, like me, for instance. I work with a university and sacrifices the high income generating profession for the sake of love in accounting in education. They are the accounting professors, researchers, and CPA reviewers. And we are called CPAs in education. Now, there's a group here in the Philippines. It's called the National Association of Certified Public Accountants in Education, or the NACPA-E. And if you are a professor in college or university, you can join this group, NACPA-E. So in total or in sum, there are four major areas that a professional accountant can work with for practice. Number one, in the government. Number two, in commerce and industry. Number three, in public accountancy. And number four, in education or the academe. And these Filipino CPAs are likewise members of the prestigious national organization, which is called the TICPA, or the Philippine Institute of Certified Public Accountants. Now, in the US, there's another or a similar organization, group of accountants, which is named the American Institute of Certified Public Accountants, or the ICPA. So now we will distinguish bookkeeping from accounting. So what is bookkeeping? It is defined as the process of recording systematically the business transactions in a chronological manner. So what is systematic? Because it follows procedures and principles. Chronological, meaning it is recorded in the order of the date of concurrence or occurrence, meaning if it precedes transactions based on the date. Recording is based on the date. While accounting requires complete and accurate bookkeeping records necessary in the performance of its responsibility is the analysis and interpretation of the financial reports. So accounting need not be you are not required to record, no, because this is done by the bookkeeping or the bookkeeper. So the accountant only performs or is responsible in analyzing and interpreting the financial reports. So how is it analyzed? If it's interpreted, whether it is the business is doing well, whether the business is liquid, meaning it has enough cash to pay its debts, whether or not the business is highly indebted or not, the capital is not enough insofar as the debt ratio is concerned, no? Capital to debt ratio is concerned. Now, the analysis is done or performed by an accountant, and this is the accounting. This is the accounting. So how can bookkeepers be of help to business and the government? So we're talking about bookkeepers, not the accountant. So all the business transactions by the bookkeeper will lead to a correct determination of the results of operations, meaning the results of operations of the business, whereby the CPA can also determine the correct amount of taxes, whether they be percentage tax, VAT, or the value added tax, or the income tax due and payable to our government. So the bookkeeper and the accountant, they're the ones who are able to compute the tax liability of the business. And the business then pays to the government, specifically to the BIR or the Department of Finance. Now, taxes, which are considered the lifeblood of a nation, because without taxes, the nation cannot survive or cannot live. Because how can a nation defray its expenses if it does not have funds? No? That's why taxes must be collected by the government in order for it to survive. Another question would be, why are bookkeeping of business records and documents important? First, the records that should be kept by the business for the purpose are called books of accounts. Now, the books of accounts could be a general journal. A general journal contains the debit and crediting of the transactions or the basic transactions of the business. And there are other books like the ledgers. No? Could be sales ledgers or account receivable ledgers, or the inventory ledger, no? Or other kinds of ledger like the disbursements ledger. So records in book of accounts are data that are financial in character, which are processed and transformed into a report called the financial statements. I've said a while ago that financial statements may be the income statement or the comprehensive report of income, and the balance sheet or the financial position of the company or the cash flow. No? This is why bookkeeping is necessary. And these financial statements are submitted to the government. Okay, let's define accounting. We're shifting now to accounting, which is not the bookkeeping now. Okay, there are several definitions from several groups of accountants. Now, the first one we have here are from the group called the Accounting Standards Council. So this council has defined it as the service activity, and its function is to provide quantitative information, primarily financial in nature, about economic entities, meaning the businesses, that is intended to be useful in making economic decisions. There's a omission there, letter E. So basically, it is a service activity. Okay, and the information being provided is quantitative, meaning it is in quantity or in numbers, no? And it is financial, meaning it is money. Okay. Another group called the American Accounting Association defines accounting as a process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of the information. Okay, so in this definition, it pertains to the work of the bookkeeper, which is the identifying and measuring and communicating. This is the work of now the accountant, communication or part. No? And what is being identified are the or measured or communicated is the economic information, meaning the results of the business or operations. And what is the purpose? In order that the decisions or that the users of this information can make informed judgments, or meaning better judgments and decisions. So who are the users of these financial statements? The management at first, the government, the BIR, and other would be banks if the business owner is lending money or borrowing money, no? Not lending, borrowing money from the banks. So he is required to submit financial statements. Then the banks can evaluate whether or not the business is doing well. So basing on the information submitted by the business owner, the bank can make well-informed judgments and decisions or better decisions based on the financial reports. So another group, which is the IPA, defined accounting as an art of recording, classifying, summarizing in a significant manner in terms of money transactions and events which are in part of at least of a financial character, then interpreting the results thereof. Now, in this definition here, the bookkeeping part is the recording, classifying, and summarizing, while the interpreting the results thereof, this is done by the accountant. Now, all of the above definitions, or all the definitions which we have read and if discussed, they touch the most important points of accounting, which are that accounting is about quantitative information, and the information is of a financial character. So meaning in terms it given, it is money, no? And then the usefulness of information is about to make better decision or wise decision. So which definition could be the most, as far as the book is concerned, it says that the definition made by the Committee of Accounting Terminology of the ICPA stands the test of time and still holds true because it is tailored to fit exactly the elaboration of the steps of accounting process. So which one is that? The last one, no? This one, the American Institute of Certified Public Accountants definition. The definition mentions the four functions of accounting, the ICPA definition, which are recording, classifying, summarizing, and then interpreting. Now we will define these functions. Recording, this is the function of the accounting process, which involves the routine and mechanical process of writing down the business transactions and the events in the books of accounts in chronological manner. This is called the journalizing. And you can learn it in your accountings ABM1, 2, 3, and 4. No? The other function is classifying. Here, it involves sorting or grouping of similar transactions and events into their respective kind and classes. So this is actually the process of transferring and entries from the journal to the ledger. It is called posting. No? So based on the journal, in the general journal, you post it to the ledger or transfer it to the ledger, which could be the general ledger or the subsidiary ledgers, which I have already mentioned. No? Sales ledger, accounts receivable ledgers. So the accounts receivable ledgers, meaning it is the ledger of the business debtors. So there are, if you have sales in credit, meaning it's being it's not yet paid, you have list of customers that you can find in the accounts receivable ledger. No? The third function is the summarizing. Once it is summarizing, meaning the bookkeeper now makes the financial statements and the accounting requirements as well. It starts from striking of a trial balance. So he makes the trial balance, then he plots down the adjusting entries in the worksheet and prepare the closing entries, meaning the closing of the nominal accounts or the accounts of the income statements found in the income statement. Then post-closing trial balance, and then reversing the entries. And the last function, which is interpreting, involves the analytical and interpretative works. This is done specifically by a certified public accountant. Okay. Now, let's bring us to the point of the nature of accounting. What is the nature of accounting? The accounting is the language of the business. That is, some say, it is the bridge of communication between the business and the users of the information. The accounting, some would say that accounting is an art. There is beauty in accounting when we speak of creativity. Some say it is a service activity. It involves collecting, process, and communicating the financial information in order to draw sound economic decisions. Then accounting is also a process, since there are various steps involved in completing the accounting cycle, which are the identifying, measuring, and communicating to attain sound economic decisions. So this ends our discussion of Chapter 1. For comments or suggestions, write to my email, lyndon.maceren@cit.edu. Thank you for your interest in learning accounting. This is your host, Professor Lyndon A. Maceren.